Hello everyone, welcome to my another video tutorial. Today I'm going to discuss with you on how to develop your trading strategy with a price breakout pattern scanner. Uh, as everyone knows that trading can be enjoyable and profitable when you know what you're doing, but it can hurt your finance if you neglect some basic principle of it. One of the important basic principles is to get statistical proof of your trading strategy before you actually apply the trading strategy with real money. With this point, we need to count the success rate of each pattern. Um, I'll quickly show you how to do on price breakout pattern scanner. First of all, open the MetaTrader terminals and load your price breakout pattern scanner. Uh, and In price breakout pattern scanner, you can replay past historical patterns by just clicking these buttons. So you will get the past patterns like this. Yeah. So when I say count the success rate of each pattern, it actually means that when the price break outside these patterns, and are they actually hit your take profit level, or is it actually hit your stop loss level? So normally, your take profit level will be actually that width of this triangle at the point where price breakout happens. So this height will be actually your take profit level. So somewhere here will be your take profit, um, and also your stop loss level will be somewhere on this envelope line. But it's textbook approaches, but just like this triangle, symmetric triangle case, you have a Ichimoku cloud, overlapping with this triangle. Then your stop loss level might be this line, uh, this line instead of these lines. So you need to set your stop loss level sensible places. Okay, so so re replay your past historical pattern and see where uh, if you have a trade according to this pattern, if you could actually make money or you lose money. And again, if you trade based on these patterns, where you would have made money or you lost money, right? So count the success rate of each patterns. Okay, uh, and also try to find the directional clue from each patterns. Um, Symmetric triangles won't tell you the directional clue, but like this, either falling wedge patterns, these patterns, or this is a falling wedge as well, the symmetric triangle. So like these rising wedge patterns will give you some directional clue. So when you develop your own strategy, try to find the directional clue. What these patterns uh, tell you which direction the market will go, and this is very important to know. And I studied this pattern already, so I know this rising wedge pattern will tell you, quite often sell markets. When the price break out through this rising wedge pattern, it will tell you the sell market. But also I knew that this occasional rare breakout happens as well, like this little bit of a breakout you can see, occasional rare breakouts. Same for the you know um, falling wedge patterns, too. It tells you the directional uh, clue. So you need to use this information accordingly. And also remember that there can be a false breakout too after you know, when you have a patterns, there can be also false breakout too. Um, and when the false breakout happens, you can actually re-enter the market. Um, so like this case, there is a false breakout, and then you probably hit your stop loss once. But then here you actually have a second chance to enter, and it would be successful. Your second entrance will be successful. Um, if you this is assumption that if you're purely looking at the pattern and trading based on you know, this breakout, not using any other indicators. But you know, to improve your profitability, we recommend you to use oscillators. It is very important to use oscillators to prevent the bad trading. Quite often, this oscillator will help you remove a lot of bad tradings when you're using with this breakout pattern scanner. Um, for example, um, let's go back to this. For example, when you use oscillators, um, the the point you have to measure your oscillator readings are actually not the point where the prices break out, but it is actually point when the price hit opposite wall of the patterns. So we are talking about this, actually this point, this cross line point here. We are talking about this point, uh, not this point, but this point. We need to measure the oscillators reading. So if you see at this point, the oscillator readings are quite significant near the, for example, for RSI, if you get near 70, or CCI, if it's greater than 100. Sometimes this is a little bit less, but just to give you an example, I would bet on sell side of the breakout rather than buy side of the breakout. Um, if you go to another patterns, so it's also the similar principle here. When the price price hit this wall, you see the actually RSI readings and CCI readings are very low, indicating there is a oversold condition, right? So I would rather bet my you know, my trade on buy side rather than sell side, because of the oscillator is very low, right? So get habit of using these oscillators together to remove this false breakout. You can certainly remove a lot of false breakout, and you can increase your success rate. And also stop loss first before take a profit. I always recommend you to spot stop loss level first, and then to spot take profit level. If you do the other way around, for example, if you spot take profit first and then spot stop loss, then stop loss will be influenced by your take profit level. This is bad because you might set your stop loss too optimistic. Therefore, I always recommend you to set stop loss first. And also remember that if the pattern uh, if the pattern does not satisfy the right condition, then don't trade and look for better one from another chart. Simply speaking, you don't have to risk your money for something uncertain. You know, for example, here on the latest pattern, we don't have any breakout yet, and also our oscillators are in the middle, which is quite awkward to trade. In this situation, don't try hard to trade. You just simply open another chart, any chart, and just load this template, preset template, and this looks better. And if you just open another chart and just load the template, it only take like 30 seconds, and it's far more clear signal here than this gold, right? So remember this principle. If the pattern does not satisfy the right conditions, then don't trade and look for better one from another chart. This is a golden rule. Don't try to risk your money for something uncertain. And also, if possible, trade freshly formed patterns only. This means like this. It's best to trade, for example, if it's let's say like this one, it's best to trade. You have the pattern here, and at this point, right? This point is the best to trade because of you have a you will sell when price is actually still quite high, but now it's already 5 bars gone down, right? So you will sell. Price is already gone down. Some how many pips? Like 7 pips below this. Uh, previous level. So if you already missed the opportunity, just to look for another one and trade with the fresh patterns. So don't try to trade on here. You only trade here, so you can set your stop loss far above than this level, and your take profit will be somewhere here. So it's far great great risk to reward ratios. Yeah. So remember that if possible, trade freshly from the patterns only. And as I consistently mentioning to people, price breakout pattern scanner can actually form a very powerful trading system when it's combined with harmonic pattern plus. For example, if we go back to just delete these lines, right? If I just add harmonic pattern plus MT5, now let's see. Here, look at this. Now this is falling wedge patterns. Okay, this is falling wedge patterns, um, indicating the buy market. But also, nearly the same time, we have a Gartley patterns from harmonic pattern plus. It's like this. When there is a two patterns indicating the same direction, then there is a great chance that this directional movement will be really happens in the market. And as you see, um, this price actually rise up to nearly 100% over actually 100% retracement level of these Gartley patterns. So when these two patterns work together, you actually have even higher accuracies, uh, even higher success rate you can achieve. Um, okay, so I only outlined a very basic principle, but this is very important, and you must remember this basic principle. Especially, I emphasize use of oscillators. This is very important, and also in terms of risk management side, you also spot stop loss first and then spot the take profit. Yeah, and also if the pattern does not satisfy the right conditions, then don't trade and look for better one from another chart. Yeah. Okay, that's it, and thanks for your attending for these video tutorials. I'm going to see you again with another video tutorials and next time. Thanks so much.